everyone, and welcome to this episode of Let's Talk. I am Sharika Turner, and with me I have Nicole Dickerson, and we also have our co-host June, who's not with us today. But we are simply three friends having a conversation, and we want to share our story. We use our expertise from the community to come in and join and share their journey. At this point, I want to introduce Ms. Shawn Wells and Letitia Jones.
Hello,
Let's
hello.
talk, ladies.
Hello.
Hello, hello.
Hello.
So I want to share something first that I saw in your bio,
Okay.
Letitia.
Okay.
And then I want you to elaborate on that
Okay.
and how you got started with insurance. And Shawn, I want you to follow with her.
Okay.
Okay, you said, as parents ourselves, we know firsthand the importance of protecting what matters most. We're passionate about helping other families navigate the complexities of insurance so they can feel secure and know their family is properly protected. Now that's a big topic in our society today. Can you share with us?
Yeah. So I am a mother of three. Me and my husband, John L. We have a 15-year-old son, a 13-year-old daughter, and a 5-year-old daughter. I say she's going on 25. But we know how important it is to make sure that they're taken care of, even if we're here or not. And in our community, there's a lot of families that they protect themselves with life insurance if they know about it. But no one actually thinks, what happens once I'm gone? Who's going to take care of my kids? Is my spouse going to be okay to be able to do this on his own if something happens to me or vice versa? So we want to make sure that our kids still live the life that we provided for them, or even better, because there's a lot of families that have to downsize, right? It's a lot of families that they have to move in with family, or they end up losing a lot of things because they're unprotected. So our main goal is, I don't want my kids to go through that. And if I can protect my community as well, I want to make sure they have those resources as well.
Yeah.
Yeah.
So to piggyback off of Letitia, basically, I'm a mom of four. My daughter, I lost my oldest daughter in 2018 to domestic violence. And so what really propelled me to take this journey with making sure that families are properly protected is that she was covered with life insurance. We took all the right measures to make sure that our family had life insurance on everyone. We went to file her death claim, and the insurance agent failed to tell us that when she turned 22, she aged out of her policy. So when we went to file the death claim, there was no money there. So we were not able to have the funds that we needed to bury her with the life insurance policy. So we had to use our savings to be able to do that. And not only that, she left behind her daughter, her 1-year-old daughter at that time. And so now we have custody of her, and we're raising her to the best of our ability. But her life could be so much better if we had that policy in place to be able to set up a college fund and be able to set up an investment account for her to be able to have when she turns 18 or when she becomes an adult. So that is really why I advocate for families to be covered through life insurance. And so that's really why I'm here and part of Letitia's team to be able to educate our community. So I have 17-year-old who's a senior this year, and then my daughter would have been 28 this year, and then my son is 23, and then I also have a 7-year-old, and then we have Ari, who is also she's 7 as well. So we have a busy household.
Wow, those are two testimonies that really make you think about,
Yeah.
life and preparing for your future.
And the unexpected, because you just never know what is around the corner, what you may go through.
Mm-hmm.
And I think a lot of times people want to be prepared, and you did everything right. But you also see on the flip side of that is a lot of people that have to reach out to family or the community to look for help and funds to be able to bury their loved ones. What do you think are some of the things that people are doing wrong, or why is it that we see so many people that are unprepared for those unexpected?
I truly believe it's because we just don't have the education or the knowledge about it. My brother passed almost, 5.5, almost 6 years ago. And he was in his 30s when he passed, and he has 5 kids now. And they didn't have anything. And my brother, unfortunately, had to be cremated because we didn't have anything. And that's because we weren't taught that. Everyone's like, oh, I have it at my job. Great that you have it at your job, guys, but at the same time, you want something that you own. Because if you look at it, a lot of people don't like their jobs. And I ask my clients all the time, why would you trust your job if it's something that you do not like and you're not happy with? Why would you trust them to protect your family?
That's good, because I've never thought of it like that. You just think, okay, I have this in place, check mark, But again, and then do you really pay attention to those policies? Do you know the fine details in those policies?
Yeah.
So that's good.
And a lot of people don't know when you leave that job, that policy doesn't carry with you. So if you decide, okay, I'm gonna go switch careers, I wanna do something different, you can't take that policy with you. That policy is just to cover your employer. And sometimes you may have an unexpected emergency. Like we had a client where the person got sick. They had to leave their job, they were on leave, and the insurance didn't cover them because they were on leave. So now that they're on leave, they've left their job, that insurance policy is not covering them anymore because they're on FMLA, which is not part of their company. So now they don't have life insurance. So it's so important to have something outside of
And
work.
there's nothing to back that up. There's
Nothing
no
to back
policy
it up.
or anything. You're
Unless you get your own policy outside of work.
You have
Okay.
to be the owner of it.
Yes.
You have the right to be an owner of your policy, so no one can dictate to you how your family's taken care of. There was a recent client of ours who, she just had a baby, but she had us look at her policy because she wanted to make sure she was protected if she when she had her child and God forbid something happens. In her policy, it stated she was not covered if she passed away during childbirth. And she didn't know that until she looked deeper into her job policy. So we ended up getting her a policy. Once her child was born, we added her child to her policy. So now she owns it, and she doesn't have to worry about not being protected or her child being protected.
That's a conversation you would never hear about until it happens to somebody, and then it's too late.
Yes.
Yeah, and it's all, like I said, education. People do not have the education they need to know what coverage they need and to know what to do to prepare for that, and then the ones that are left behind, what they need to do on the back end to make sure that those policies come in force. What are the top 3 things people fail to consider when planning, like attempting to go get these policies or to thinking that they're planning for the unexpected?
I would say you have to calculate in the factor of, like I said before, who's going to take care of everything. A lot of people just speak up and say, oh, my spouse or my sister. But you got to think about, is your sister mentally and physically able to take care of and make those decisions? Is your husband going to be able to do all of these things and in the right mindset, being that he just lost you, or vice versa if it's your wife? So you have to make sure you have not only your spouse, of course, but someone that's going to be there to help support them during that time, to be able to make those decisions, to make those transitions. Because a family member, they live with you for the longest, but now they have to transition in living without you. So we make sure our clients think about that decision, because they'll say, oh, I want to put my boyfriend. Well, sweetheart, you're not married. Or I want to put my girlfriend. Or I want to put my cousin. Well, if your cousin's not 18 or older, you can't put your kids down as a beneficiary, because by law, if they're not 18 years old, they can't make those decisions. And then it goes to the state. So the state has to say then, okay, well, your child is not 18. I can kind of navigate, and we'll give you a little bit here and a little bit there. So now you don't have enough to bury your kids or to bury your family, because now your beneficiary is a 12-year-old or a 5-year-old. They're not old enough. So make the right decisions, plan it out, write it out, and then ask those questions. My team is more than happy to do a consultation. It's free. We don't expect anyone to say, oh, I'm going to use BFS. No, we want to make sure you have the right things in place. I don't care if you're with us or if you're with another company. Just make sure it fits your family needs and it's affordable for you.
So let's just say there is someone young, 25, father and mother's already passed and they never had kids. How would they handle a beneficiary? Like, what does that look like for them?
So if they're 25, like
Yeah.
the child is 25?
No, the person. They don't have kids yet,
Okay.
and their parents are no longer in their lives.
So I always say what we do is buy term and invest the difference. Get it while you're young. You can put it in place. It's more affordable. But the best part about it is if you have that investment account, because we do buy term and invest the difference. The investment is there to help grow and build. So when you hit, say, 30, 40, 50 years old, you don't have to wait till you're 65 years old to retire. That is building and building your family generational wealth. Plus, a life insurance it's not that expensive. A lot of people think it's really, really expensive to get. It's really not. The younger you are, the better. But you don't need an arm and a leg to like $1,000, $100,000, $2 million. You're young. Get something affordable. Have it in place. But the best part is make sure you're wrapping up every single detail. Meaning you have an investment account, you have a life insurance policy, and then you're able to build from there. Because a lot of people, what they do is, oh, I just leave it at my job, but they're not growing anything. We're not going to have anything in Social Security in the next few years. So now you don't have anything to retire with, and you're working until past retirement age. So we always say, if it's something small, 50,000, 100,000, great. It's affordable for you. You're young. A 25-year-old may pay $30 to $40 a month for 150,000 in coverage. That's not bad.
Yeah, especially if you don't have any children or anything
Yeah.
like that.
Yeah.
And I think a lot of people don't tie life insurance to investment.
Mm-hmm.
So
Yeah.
can you go a little bit deeper into that?
Yeah.
Kind of explain how you tie the two together?
Yes, so with our company, we do buy term and invest the difference. So if a client says, well, Letitia, it's just me, I have, say my budget is $100. I'm going to take 50 of that and put it into a life insurance policy. The other 50, I'm going to put into an investment. With us, you can pay $25 a month to get it started. And with us, you can compound at a 9 to 12% rate of return guaranteed. But if you're investing more, so if they have 50, it's compounding at a higher rate of return for you. So now you have money working for you, and you also have the life insurance policy. So when you retire, you can roll your 401k into that, and you're not getting penalized with those taxes because it's rolled over into the investment. But at the same time, that money is growing and growing. So you don't have to worry about a Social Security account.
And really, your insurance is there to protect you while you have responsibility. So like when you have a mortgage, you have kids, all of that, that is what the life insurance is there for you to protect your assets at that time. So what we really want you to do is have that insurance there so it can protect anything in case something happens to you, but also have that investment account so that once you're don't have responsibilities, maybe you don't need $100,000 in life insurance, maybe you just need enough to bury you, but you have that investment account for you to be able to use and live off of where it's going to pay you back once you get to the age where you're not able to work anymore. So that's really what we stress, to buy the term and invest the difference. So making sure that you're putting that money in there so that it's working for you at a 9 to 12% interest rate.
Yeah.
I like that. And that's just more preparing for later, not just the unexpected as far as death, but
Absolutely.
just preparing for life later. Because like you said, Social Security, things like that may
Yeah.
not be available. You have something to fall back on. That's
And then
good.
another thing that people fail to realize when they're planning is the amount of life insurance that you need. So you have to take in consideration your children's college fund. How much is your mortgage going to be? How much debt do you have? All of those things need to be taken into consideration when you think about your policy. So if you have a mortgage that's going to be, your mortgage is still there, and you have a house payment that you have $230,000 that you still own it, you don't want a $50,000 life insurance policy, because then that leaves your husband or your wife with that bill, and then they're $50,000, that's enough to bury you and maybe take care of a few bills, but is that going to pay your house off, where they may have the option of having to move because it's not enough money? So I think a lot of people don't take in consideration of how much debt do you actually have? What will your kids need in the future when they're taking out life insurance policies?
And so what we do for our clients is we do a thing called DIME. It's called the DIME method. So D is for debt, because regardless if you pass away, someone has to pay it for that funeral. Or any credit cards, or you have car payments and things like that. So we put in enough, we calculate what your debt is, that tells us how much you need for your debt protection. I is income replacement. I ask a client, they may make, say, they may have $24,000 for the year. I times that by 10, giving you 10 years of income replacement. So then you have that, if that's 24, that's roughly about what, 240,000 in income replacement for your family. Mortgage, you have 100,000 in your mortgage, we want to make sure that that's paid for. So God forbid something happens, boom, we send that to the bank, your mortgage is covered, your family doesn't have to be uprooted. And then education, like Sean was saying, if you're no longer here and say your kids want to go to college, you're paying on that tuition if they're in college.
Right.
They're still able to get that taken care of. So we add all of that up, and that gives you the total amount of life insurance that that family needs to make sure everything's taken care of.
Yeah, that's good.
So my heart is really on the youth right now. Every time you turn around, it's a GoFundMe to bury somebody. I'm just wondering how many the younger generation that's under 30 that actually sign up. Like, is that something that happens often? Like out of a month, you know?
To be quite honest, if they have responsibilities, say like if they're in their 20s, between the ages, I would say between 25 and 30, you have a better chance because typically they have kids or they bought their first home or they're doing something, starting their own business. They have responsibilities. So if they're in that category, yes. If they're 18 to 25, they really don't take it serious. And that's the sad part. So our team has actually started tapping into the school systems, doing different events. Like we're a part of, Pathways with UVA, Pathways and Pipelines. So last year they did at John Paul Jones Arena. Our team was there the first half. They had kids out there from all of the high schools just to see what they wanted to do career-wise. Well, we were educating the kids. They came by our table. We weren't trying to bring them necessarily into business, but educating them on, okay, you're going to college. These are some things you should know about and this, that, and third, giving them pamphlets so they can understand exactly what we do. And then just giving that education so they know that these things are out there, utilize them, contact us, whatever the case may be, but so they know, because they don't teach us these things in school. And I think if they started with the younger generation, educating them soon, a lot of families wouldn't be in debt now.
Can you just take a moment and speak to the camera and share with the younger generation how important?
Most definitely. It's very important that you guys plan ahead. It's very important that you ask questions, that you reach out to us. We are BFS Financial Services. We're on social media. I know all of you guys are plugging into social media. Reach out. We have mentors that will plug into you, help you answer any questions, because guys, you want to set your future up. There's people in our community that are rich and they've been doing it for years and they don't pour into us, our community, our kids in the community, Charlottesville, Albemarle, Monticello, Western, right? There's kids that are still struggling to this day and don't understand that process. It's highly important that you guys take full advantage of that.
I love it. So speaking of kids, our little ones. So I have the life insurance policy through my work, but is that really what is that enough coverage? Like what do we do to protect our little ones? So God forbid something happened to them, but again, we want to make sure we have coverage for everyone in our family. So of course I'm gonna have one from me or my husband, but is there something additional I need outside of work also for the younger?
Most definitely. It's sad because one of our clients a few years ago, they were on vacation. Child unfortunately passed away. Because they were on vacation, the child was not covered. Because with your job policy, some policies they have, if you don't pay attention, if you're on vacation, if you're traveling, if that child had passed away when you return to work, that child would have been covered.
So if you're on paid time off, your coverage is kind of in limbo. For child and you and wow, I never knew
the
that.
small print that we do not get to see.
And we just sign and we keep moving.
And keep going. It's like part of our benefits package. Like, okay, check the mark, got that. But you really don't have that coverage. Wow.
So that just happened to me because we got a new insurance, and I've never had to really use my insurance until I was in a car accident 1.5 years ago. But I find out I'm getting ignored because I'm trying to get my my paid time off because I'm what did my son say? Short-term disability. I got 1 check and a half, and then I started being ignored. No one can give me an answer. Ms. Turner, I apologize. No one's answering the phone. I don't know why the agent's not calling you back. It took me 9 months for a lawyer to call and say, hey, what's going on? Ms. Turner has not received her money. And he comes back and say, you know what, Sharika, it's in their policy. Because you have a lawyer, you will not get paid from me, from this company.
Wow.
That's it.
That's sad.
Yeah.
Yeah.
that's-
So with our policies, I love it because for one, I have 3, three kids of my own. We make sure that our clients are taken care of. So with us, it doesn't matter if you have 1 or 10. As long as they're between the ages of newborn to 18 or 17, they all are covered on your policy, and you only pay for one child.
Yeah.
But that's giving you something that you own versus something that your job owns.
Yeah.
That's truly what we push is great that you have it at your job, but read it, own it outside of your job because they really don't care. You're just a number for most part.
How many people truly have read their job life insurance policy? I'll admit I ain't. I
I can say we get a packet, but all of that information is not in the
That
packet that you
fine print is
receive.
no.
And then when the annual come around, if you've been on the job multiple years, they just say, oh, just call and say yes.
Yeah.
Answer. If you're going to keep it, just say yes. So you don't get see fine print.
And how many of people don't get that packet, like your certificate to say you're covered? This is the amount of coverage you have. This is what it covers. Nobody knows. You just sign the paper. So that's why we say it's so important to have something outside of your job so that you can actually look at it, read it, and see what you're covered, what's covered under that policy.
Yep.
So, it's getting clear and clear to me that the job is not about me.
clear and clear that we definitely need something in place outside of the workplace. That's just basic. You have to go above that. So you had, what about, how would you, so if somebody comes to you and they want to get coverage, is there any time where they would not qualify, would they get turned down for that coverage?
Go ahead. You go ahead.
With every insurance company is different. But I will say with us, I can speak firmly on what we do. So when it comes to everyone is treated equal as far as a quote, being male or female, we look at your age and we look at if you smoke. That plays a big factor. A lot of companies turn down individuals if they have pre-existing medical conditions. A lot of companies will turn you down if you smoke. With us, that's not the case. If you smoke, it may be a little bit higher because you have that pre-existing situation, but we're able to work within your budget. If you have a pre-existing medical condition, to be quite honest, this last year has been a blessing. My team has been able to get a mother, a single mother who is a breast cancer survivor approved. A gentleman who has, he's a prostate cancer survivor, approved. COPD, approved.
Sickle cell.
Yeah, so our team has been able to do an amazing job with our community, but every insurance company is different. With us, we have a table system between table 2 and table 12 that allows us to kind of play with the numbers a little bit to make it more affordable for our clients. So 90% of companies, though, will turn down individuals if they have a pre-existing medical condition or if they don't fit within those requirements.
Yeah, and I think that's a lot of the hang up with some people, you know, is one, cost, 2, oh, well, I'm not going to get approved anyway, you know, that I have too many health issues going on. Is there any other myths or things surrounding like life insurance and the things that hold people back that we could just say, but no?
My mom has a policy on me. That's one of the big ones that we
We
hear.
get that all the
really?
time.
Really?
Yeah.
Wow.
So you can't get your own policy.
Oh, most definitely. You
Yes.
can get your own policy.
You can get your
okay.
own
So they just say, I don't need one because my
Yes,
mama
my
got it.
mom.
Oh, okay, gotcha.
Yeah. They say that all the time. Or I have it at my job. That's another one. What would you say?
I would say those are really the two biggest ones. A lot of times people wait until it's too late.
Yeah.
Most times it's like, oh, I'm sick, then they want to get life insurance at that point. So I think that is one of the biggest factors of people not getting it or being approved is because it's too late. Like you already have this ailment or you're past the age to be able to get it. So people will say, well, I want to get insurance for my 85-year-old mom. Like, yeah, you can't do that, you know. So the younger you are, that's the most healthy you're going to be. So most people should be trying to get that insurance at that time when they're young.
Yeah, because it's less expensive.
Yeah.
Yeah, that's good. And again, preparation. Do it before you need it.
Yep.
So I lost my question. You can go ahead, Sheree, because I'm thinking about what I was going to say.
So can you just speak to what are some key items people should consider having in place in case of the unexpected?
Just plan, really. Sit down with my team. I'm not going to say how to go a lot about it. But if you have somebody that is a financial professional and does life insurance, does investments, sit down with them, ask the questions, plan things out how you want it. Make sure you have a written will, especially if you have younger kids, of how you want those processes, things to leave to your kids so they're not left to other family members. Make sure you have the right things in place, a will, a trust, all of those things, they matter.
And the conversation just goes to full circle to everybody think they're okay, but you're really not okay.
Yeah.
What were you saying, Sean?
I think I forgot. I think to just making sure your beneficiaries, like if you have that policy, checking that policy yearly to make sure that your beneficiaries are up to date, making sure that it's not like, oh, my mom was on there but she passed away, or my brother was on there and they passed away. And then also too, we also make sure that there's a contingent beneficiary on our policies. And a lot of people don't talk about it, but if something was to happen to your main beneficiary, then you leave that out there just to be in probate for the courts to be able to decide. So we always put a contingent, so someone secondary to your beneficiary who can also handle your affairs. So when we write a policy, we also make sure that you have that second person on there so that you, in case your beneficiary is not there, that contingent can handle the things that needs to be taken care of.
That's good. Talk about saving the family feud.
Also, to add to that, there's a lot of companies right now that are going through an investigation because they haven't paid out those death benefits because a beneficiary doesn't know or family doesn't know they had that policy. Well, with our team, we get emergency contacts as well. And we sit down with them, they get a certificate, emergency contact certificate or a beneficiary certificate, so they know who we are. And we know who they are. We're not just talking to anybody about your, giving them their information for your policy. They know who we are and vice versa, but then that also gives us an opportunity to make sure they're protected. We're breaking those bridges within your family and making sure everybody has what they need to leave their family.
So what if, say, my auntie said she had a policy, but we don't know who she had it with. Is there some type of system that you could look up her name and find out?
If they're a client of ours, yes. But I would say reach out to the company that
But what
she
if they
has.
don't know if it's what company?
That's
that
where
she
a
just
lot
said
of-
I have a policy, but no one knows.
That's
what
where a lot of the
Okay.
situation come where they're bumping his because they have no way of proving it.
Wow.
So you said something good.
Yeah.
Wills. Let's talk about it. Because, they be like, oh, well, so-and-so is going to take care of that. Or this person, they going to have my kids, something happened to me. That don't count. Like,
No,
that doesn't count.
No.
So talk to me or us and our viewers about, one, what is a will versus a living will, and how do you set somebody in place to handle your affairs if something happened to you?
So a will is pretty much what is in place when that person is no longer here. That is something that is designated, oh, I want my kids to have this, I want my children to go here, things like that. A living will is put in place when that person is still living, but they cannot make those decisions on their own. That's just like having a power of attorney. That's what the living will is there. They're the ones that are the person that's able to make those decisions. I always say to get a will and a trust. The reason being, one can be contested. You don't want to be tied up in the courts for years because a family member cannot like what it is. With the will, they can pretty much just say, oh, I want to go to court because I don't like the way that is.
So just because you put it in there, these are my wishes, don't mean.
Don't mean
Wow.
I've never heard that.
You want to have a trust because they cannot contest your trust.
So we aren't always educated on what a trust is. So educate us.
So a trust allows everything to go into play. They cannot contest it. They cannot hold you tied up in court for years. That's why a lot of families that do have that, if a family member disagrees, you can go and be in court for 2, 3, 5 years just to settle that. If you have a trust, that stands and can't no one tell you, oh, nope, I don't want, nope. They have everything in place and can't contest that.
Okay.
So that holds everything solid.
Now, when it comes to a trust, is that mean you're spending more money to have a trust? Is there a lawyer involved? How does that work?
That's a good question. So everybody is different. The great thing, and guys, I want you to really hear me. With us, you can get a lawyer and a lawyer on standby 24 hours a day, a free will and trust. You pay $39 to start, $28 a month, and you have all of that. A lawyer on standby with you for any and everything with our team. I can't speak for other companies and things like that. I do know there's companies that you pay $199 for just the will itself, but that doesn't give you a lawyer on standby for anything. So you have the lawyer that's going to help you go over that will, make sure everything is put in place, the same with your trust, and then you have that lawyer if you get an offender bender. If you're suing someone because the light bill company, they're charging you too much, you have that lawyer there for any and everything. So that's the best part with us. $39 to start, $28 a month, and you have all of that.
So when creating the will, does that mean I can just write it on paper and it's done? Do I have to get a notary?
Depending on how you do it, but you do have to get a notary regardless.
Okay.
With us, the lawyer will send you paperwork. You will fill out everything of how you want it, how you want to leave things, who you want to leave it to your kids, if you want to separate it, however you want to do it, and then you send it back to your lawyer. He proofreads everything, calls you, go over it with you. They get it notarized for you, and they send it back to you. So you don't have to go do the whole notary thing. It's all taken care of for you.
So what type of things do you want to make sure that is stated in the will? So, because I was talking about like with your kids and stuff like that. Like, so that's things that you want to make sure that's in there, who they will go to, who's going to, okay. Anything else you want to add to that you want to, because some people don't really dive into what a will is and what needs to be in there. So just the whole process of making sure you have that in place and what information you need to have.
Just being specific of
Okay.
what you want. If it's, you want your kids to go to a certain family member, note it. If you want your kids to get a certain amount of money when they hit 18 or 25 or whatever it may be, note it. Because if you note it, then no one can contest how you wanted it done. So you just have to be very specific on how you want things laid out.
So when we take into the count of preparing all of these things, so like top three things. All right, so we want to make sure we have the life insurance in place. We want to make sure we have a will in place. And you said a living will, is that good to have both of those as well? So what are some other things that really need to be in place as far as preparation? We talked a little bit about investments. What else can you just suggest that people have in place when preparing for the future and the unexpected?
Those are the really main things, is having a will and trust, a living will, your life insurance, definitely, because that's our team's foundation, is the life insurance, because everything is built from that. But those are the main things. Would you agree that they pretty much have to have?
I would say, speaking from experience in the unexpected, like definitely having the life insurance in place. I know that would have changed the whole dynamic. And then also having a will in place, just to know like what she would have wanted. So I would say that an investment account would have been, I could have rolled that over to my granddaughter, you know, for her to be able to have that for her college fund. So definitely that. And just making sure that, you know, the will is really a big part, because that is going to be your instructions to everybody else, like to know exactly what you want or what you would have wanted for your kids and everybody else in your family. So I would say definitely those are the foundations from experience.
Then going back to the life insurance, because like I have like a hole in a term. So is it good to have both? Or?
We need to dig deep with this one because I hear so many conversations about whole life insurance. Yeah.
In our community, and for years, everyone said, "Oh, a whole life, a whole life, whole life." To be quite honest, a whole life to me is a ripoff because it's more money for one, and they say, "Yeah, you can borrow against it." Well, there's a cash value that is built up. It takes 3 to 6 years for that money to start to accumulate in that cash value, right? If you borrow against it, you got to pay that back because you're borrowing your money. It's your money. Why would you want to borrow it? I mean, might as well put it in the bank, right? Because you don't have to pay it back. So if you borrow against it, you got to pay that back. That interest is probably anywhere from 8 to 15%. That's a lot of money, to be quite honest. And the sad part about it is if you pull all of that cash value out, you cancel your policy. So there's nothing.
So paying back, does that go to the company or to you?
That goes to the company. Like you're just paying it back alone, pretty much. It's your money, but you're paying a loan on your own money.
So say you had a $50,000 policy, you took out $25,000 to be able to go buy a truck. So you bought that truck for $25,000, but you pass away in an accident on the way to get that truck. Your family's only going to get $25,000, maybe, of that in policy because now you've passed away, or that person has passed away, so now that money is coming out of the policy that they had. So if they had that $50,000, you took $25 out, then your family's only getting that $25. But that's determined by the insurance company because you may only get the cash value or you're going to get the death benefit.
Oh, wow.
Yeah. So say you pass away and you haven't paid that loan back. Now they're going to take what you borrowed and the interest from your death benefit. So now your family may not even have a death benefit to bury you with.
So why? I guess I probably know the answer to this, but why do you think that it was a big push for a while for whole life policies? Why is it just
It's
a money
attractive
thing?
because you can borrow from it. So, I can get a loan from this and I don't have to go to the bank to get it. I can just borrow from my insurance policy. So it's attractive.
But it's not benefiting you
Not
at all.
at all.
Check mark.
It
and
put
get
more
rid of
money
that.
in the agent. it put more money in the agent's pocket than it does taking care of the client.
Okay.
And the sad part about it, my husband's father he passed away almost about 4 years ago. Because he didn't have the policy, but for 3 years, they paid my husband $200 to bury his father because he didn't have the policy long enough to get the death benefit.
So it's not something that you get that benefit
No,
right
not
away.
with the whole life policy, no ma'am.
No.
And with term, a lot of people say, "Oh, well, I got to renew it." Well, don't you renew your insurance for your car
insurance? Yeah.
every few months or so like that? The great thing with us is that's why we say buy term and invest the difference. You have something that you are renewing after 35 years. So if you got $1 million policy for the next 35 years, you're paying that same amount as if you were 25 years old for the next 35 years. But with us, you're guaranteed insurability until age 95 to 100. So what we do is, after that 35 years, you may get sick, your health may decline. We're not going to quote you because of your health. It's just based off of your age. And you still have that balance of being able to pay what you can afford and having that investment grow for you.
Yeah. And a lot of times people don't know too that if you have that whole life policy, once you come to the end of that policy, they roll it over and you're going to pay double a lot of times for the amount that you were paying in the beginning.
Explain.
Go ahead.
I'm about to say, because I ain't came to know end yet. I was like, let me
What does coming to the end mean?
Yeah.
So you may think that you get a policy, that whole life policy, and I'm gonna keep it. I have it for the whole time. Well, when you hit the 100, they say you 100 years
100.
old, right? You'll get that policy. They'll pay you that money. You have no life insurance policy. They're gonna give you your death benefit if you make it to 100.
When you reach 100 years old.
They're gonna give you that. Then you have no policy. And the sad part about it, you can no longer get a life insurance policy because you're too old.
Too old.
Oh, wow.
But I do want to say this, guys. No term is created equal. There are different types of term policies out there. You got to pay attention to the type of term policy you have.
That's a lot. You definitely need to sit down with somebody.
Yes.
Most definitely.
And just like you do with anything else that you're, investing in, or like when you go to plan for a home or anything, you
Most
got to
definitely.
get in there and sit down and understand what you're getting. Is there any like just simple, like if say a family, husband, wife, 2-3 kids, they have a mortgage, a couple cars, like what is like basic what they need to come in and do? Is there any term or any policy that, okay, this will, if you just need something simple and basic because you don't have a lot, what do you suggest for them?
Everybody's different. It's
Okay.
really hard to say. Everybody's needs are different. But what I would say is come see me. Come see one of our team members because we're going to literally break down, like I said, the dime method
Yeah.
and see exactly what you need. Now, don't get alarmed when you see the numbers because it may be a little bit outrageous, right? You might be like, I need $800,000 to take care of sad, but yes.
Yeah.
But if you're young and you're healthy, we can get you covered for an affordable rate. And making sure that your family doesn't feel like it's another bill and it's something that fits their pockets.
Yeah. And it's necessary. I think
Yes.
I went through the same thing. Like I did it at a young age when I sat down and got my policies, and I wasn't considering that at the time. I was a single mom, and I had to consider, okay, putting my child through college. Giving money for somebody to help finish raising her if something was to happen. So the number was like, what? But it's those are the things you have to consider.
Yeah.
So it's really important.
Just get a free consultation is all I ask.
Yeah.
If you have a policy, reach out. We sit down with you, go over what you have, make sure you understand what you have. And if it works for you, great. And if it doesn't, we'll do everything in our power to make sure that you and your family are protected.
Absolutely.
And so how often, so it's like, speaking something about myself right now. So how often, say, I've had my policy probably since my 20s. How often do people need to go in and look at those things and reconsider if they need to change anything, if they need to up it?
I always ask my clients how often do they want me to check in. Sometimes it's every 6 months, sometimes it's every year. It all depends on where they are in life. Because if you're young, newly married, starting your family, I'm going to check on you every 6 months because you may get pregnant, new family member, things may change. And if you're older, okay, I'll check on you maybe 6 months to a year because everyone's situation changes. But I will say definitely go over your policy, at least looking at it every 6 months because things can change, your needs can change. Yeah.
I want to talk about the pay rate of insurance for anyone that's still like, I don't know, that sounds good, but I don't know if I could afford it. Does insurance increase like annually, every 5 years? You might have gotten one policy, but now 6 years later, will my policy be different and we're in the same situation, same age bracket? How does that work?
So to do the policies in general, there's a thing called the law of large numbers. So what they do is they kind of take it and categorize it as this is, say, a group of women. They're around the same age, same medical issues, or same everything. That's what they're going to calculate it on. So it's hard to kind of say it can go up and it can go down. But for the most part, within, I would say, 2 to 3 years, it's pretty much stayed the same. It's not been a drastic change for the next 2 to 3 years since we've been in the business. So me and my husband, we've been here about almost 3.5 years now. The things have pretty much stayed the same. They may have jumped up maybe $1 or $2, but nothing too crazy that, oh my God, I should have got this last year. Nothing like that, no.
So for someone else, outside of like your immediate family, not your husband, not your child, can anybody just get a policy on you?
To be quite honest, I always put it out there on social media. If you have a child and you're not with that parent, that significant other, rather you're the father or the mother, get a policy on them. You do have to have their consent though, but the first payment comes out of their account. And after that first payment, they can give you ownership and you can take care of the policy for them. But if you are mother, you have to be insurable, have an insurable interest. So mother, father, kids, things like that. So for instance, like my sister, I wouldn't be able to, I can get a policy on my sister, but I wouldn't just be able to go get it without her permission. She would have to answer the medical questions. She would have to sign off and be able to say, okay, the first payment comes out of my account. But then after that, she can sign ownership over to me, and I make those payments for her.
That's good to know. So can't nobody just be out here.
No, that is illegal.
But I mean, that's a good question because I've
Yeah.
heard stories
Yeah.
like that, and I've heard those stories more with the elderly. How do we protect our elderly in those days?
That goes to our Legal Shield.
Yeah.
We offer identity theft and Legal Shield, so it kind of protects. So with that, it'll offer any type of utilize of their social security number without them. They'll get a notification. Utilize of their name if it pops up on an application or anything. It'll automatically notify the client. So that's putting that protective shield up for the elderly. So I always say get you a lawyer with identity theft and Legal Shield. That's who we're partnered with as well. So they have that, and it takes care of anything. Like any of their information pops up, they'll get notified for it.
Yeah.
So they would have to give authorization for that to go through.
Yeah, sure. They do get preyed on a lot.
Yeah,
They do.
the scams and all of that.
So you have your insurance policy in place. Maybe you're single, and you get sick or you lose your job and you're not able to pay. Is there any safety things in place that you like can put in place to say, okay, if this happens and I can't make this payment for a month or two, like what can you do?
You wanna?
You can answer.
So we have a thing with our policies. I can't speak on all, but with ours, we have a thing called waiver premium. The waiver premium allows our clients, if they get sick or injured, say short term up to 6 months, their policy is covered. They don't have to worry about making a payment or worry about that policy canceling. If the doctor for any reason says, hey, Ms. Brown, you are not able to go back to work, your health does not allow you to, they're covered for the remaining term of that policy and would not have to worry about making a payment or anything. But then after that, say term is 35 years, after that they go into a thing called, it's like a disability policy. So we're able to work within their budget. They're already insured, so we're just making sure they're comfortable and able to afford it. And they're still clients until age 95 to 100.
So if you do go back to work, and you were out 6 months, do you have to repay?
It picks
No.
up where it left
Yeah.
off.
Okay.
Yeah.
So there's no excuse.
No,
Right.
Yeah.
Right. Most definitely.
So before we start to wrap up, is there anything else that you want our viewers to know? Any words of advice or anything that you want to put out there to our viewers?
I would say ask questions. If you guys have them, don't be scared. I know it's not something that's commonly talked in our community about. We always wait to the last minute to talk about these things. If you have questions, you can reach out to me on my social media page. Our team has social media pages as well. If you look up BFS, Built for Success, Financial Services, everybody has it on their social media, Instagram, Facebook, and even TikTok. Send us a message. We can do a free consultation or just answer your questions because we want to make sure our community understands what they have and not feel afraid or feel like it's, oh, if I speak about it, something may happen. I'd rather you speak about it and be protected than to you not to speak about it and it's too late.
Yeah, just having the conversation because death is a hard conversation to have, but just talking to your family, making sure that they have the right things in place and being properly protected yourself. So if anybody has questions, we're more than happy to sit down with them, answer their questions, be able to look over their policies, read the fine print with them just so that they know what they have. So we're here.
I like that. I know y'all said they can reach out to you on your social media page with BFS. Would you have like a specific email or specific like social media handle that you want to share with the viewers?
So the email is bfsfinancialservices@gmail.com, or you can just BFS, Built for Success, on social media. And I don't mind giving my personal number out, But my number, if you have questions, you can text me or call me directly. It's 434-825-6708.
And mine's is 434-872-3437.
I just want to give a shout out to your husband. I know he wanted to be here, and you are a tag team duo.
Yes,
So
we are.
shout out to your husband.
Most definitely. Jonell Jones, guys, a lot of you know him in the community, but he's very passionate about this and being able to help the youth. That is one thing that he is strongly about, helping our youth understand it's other things out here. Don't let little things stop you. Rather, if you want to be your own business owner, you want to learn new things, whatever it may be, go for it. And that's what he stands on.
Love it. I appreciate you both being here.
Most definitely.
Thank
Thank
you for
you.
speaking to our viewers. Thank you for just encouraging them to get out and be prepared, because you never know, and to build a fallback for your future and talk about investments and things like that. So I love it. So if you want to reach out to Let's Talk, you can reach us at Let's Talk 0300 on Instagram, and our Facebook page is Let's Talk. So as always, guys, we will definitely want to end in prayer. So we're going to go ahead and pray at this time. Father God, I just want to thank you for who you are, for your unconditional love. Thank you that you are a protector and you provide protection for us daily. But we also thank you that you give us wisdom, that you provide people and resources in our lives to give us the wisdom that we need to be prepared for anything that we may encounter. So Father God, we just thank you for our opportunity to come together today to be a resource for your viewers. Thank you for giving us the opportunity to be in front of them. May everything that they've heard today be a blessing to their lives. In Jesus' name we pray. Amen.
Amen.
Thank you again, viewers, and we'll see you next time.